The arrival of Bitcoin exchange-traded funds (ETFs) in 2021 sent shockwaves through the financial world. For years, Bitcoin, the first and still largest cryptocurrency, existed in a regulatory gray area, inaccessible to many mainstream investors. With the ETF, suddenly, owning a piece of the elusive digital gold became as simple as placing an order at your brokerage. But is the Bitcoin ETF simply a trendy marketing ploy or a genuine game-changer for portfolio diversification? This article delves into the intricate world of Bitcoin ETFs, analyzing their potential upsides and downsides, and ultimately answering the question, should they be a part of your investment strategy? Understanding the Bitcoin ETF. Before diving into the pros and cons, let's establish a clear understanding of what a Bitcoin ETF is. Unlike physically holding Bitcoin itself, which necessitates specialized wallets and exchanges, a Bitcoin ETF holds a basket of Bitcoin futures contracts. This means you own a claim on the future price of Bitcoin, without directly owning the underlying asset. This distinction has crucial implications for both risk and accessibility. Potential advantages of Bitcoin ETFs. 1. Accessibility. ETFs offer a familiar and convenient way for traditional investors to gain exposure to Bitcoin. You can buy and sell them just like any other stock on major exchanges, eliminating the need for complex cryptocurrency platforms. 2. Liquidity. ETFs provide significantly improved liquidity compared to direct Bitcoin ownership. The large trading volume on major exchanges ensures swift buying and selling at market prices. 3. Regulation. Bitcoin ETFs, being subject to traditional financial regulations, offer potentially greater security and investor protection compared to unregulated cryptocurrency exchanges. For portfolio diversification, Bitcoin's low correlation with traditional assets like stocks and bonds makes it a potential hedge against market downturns, diversifying your portfolio and potentially reducing overall risk. 5. Potential for upside. Bitcoin has historically experienced remarkable price appreciation, leading some to believe it could offer significant long-term returns. Potential downsides of Bitcoin ETFs. 1. Volatility. Bitcoin is notoriously volatile, with large price swings a regular occurrence. This volatility can be amplified in an ETF setting, potentially leading to substantial losses. 2. Fees. Bitcoin ETFs typically charge management fees in addition to brokerage commissions, potentially shrinking your returns over time. 3. Lack of physical ownership. By owning an ETF, you don't own the underlying Bitcoin itself. This means you miss out on potential benefits like direct participation in the Bitcoin network. For regulatory uncertainty. The regulatory landscape surrounding Bitcoin and cryptocurrency is still evolving. Potential future regulations could negatively impact the value and accessibility of Bitcoin ETFs. 5. Limited upside potential. While Bitcoin has seen impressive gains in the past, its future price appreciation is uncertain. Some experts believe it has reached maturity and may not experience similar parabolic growth in the future. Making the decision, to ETF or not to ETF? Ultimately, the decision to include Bitcoin ETFs in your portfolio is a personal one, dependent on your risk tolerance, investment goals, and individual financial circumstances. Consider the following factors. 1. Risk tolerance. Bitcoin ETFs are inherently risky due to the underlying asset's volatility. Only invest an amount you are comfortable potentially losing. 2. Investment goals. Are you aiming for long-term capital appreciation or short-term trading opportunities? Bitcoin ETFs cater more towards longer-term strategies due to their inherent volatility. 3. Portfolio allocation. Allocate a small portion, ideally no more than 5%, of your overall portfolio to Bitcoin ETFs to maintain diversification and manage risk. For research and due diligence, thoroughly research different Bitcoin ETFs, comparing their fees, underlying contracts, and track records before making an investment decision. The verdict: hype or hedge? Bitcoin ETFs undoubtedly hold a captivating appeal. They offer a convenient and regulated entry point into the burgeoning world of digital assets, potentially diversifying your portfolio and contributing to long-term returns. However, it's crucial to remember that they are not a risk-free proposition. The inherent volatility of Bitcoin, coupled with fees and regulatory uncertainty, necessitates careful consideration and strategic allocation within your overall investment strategy. In conclusion, Bitcoin ETFs are neither hype nor a guaranteed hedge. They are a complex financial instrument with both compelling advantages and significant downsides. By understanding their intricacies, assessing your risk tolerance, and diligently conducting research, you can make an informed decision about whether they deserve a place in your portfolio. Remember, responsible and informed investing is key, whether you're venturing into the realm of Bitcoin or sticking to traditional assets.